Hello, and welcome to this chapter over health policy provisions. I would like to say right up front that it is going to be very important that for your test, you memorize the definitions of your provisions and riders. Not try and learn them, but memorize them. If you can get bulleted definitions for each one of them, then your test becomes a lot easier. So first on provisions. Provisions are a part of every policy. You do not have to ask for provisions. They're just in there. For the most part, provisions protect the insured. Provisions will define the rights and duties of both the insured and the insurer. A provision can be reworded as long as it is not less favorable to the insured. So the insurance company can reword them at any time. All right, first, we have the entire contract provision. There are four words you need to memorize. First, the application and the policy have to be there. Then, if any riders were added, riders are add-ons to a base policy, or amendments, if that policy has been amended in any way by the insurer. It prevents the insurer from referencing any outside documents at a later date. Like, say you have to go to court, they can only refer to what's in the contract. So it's all about the documents in that contract. Now, changes to a policy can only be made by an executive officer of the insurer. You, as an agent, cannot make changes to a policy. Next, we have the time limit on certain defenses provision. This is just your incontestable clause for health insurance. So during the first 2 years, the insurer can always deny a claim because of any statements in the application. However, after 2 years, they cannot deny a claim because of statements in the application unless, and this is important, there were fraudulent misstatements. Fraudulent misstatements can be denied as long as a policy is enforced. So that's why it's called time limit on certain defenses. That 2 years only applies to certain things because fraudulent misstatements can be contested as long as a policy is enforced. Next, we have the grace period provision. The grace period prevents a policy from lapsing due to non-payment of premium. With your health policies, it will depend on the mode of premium payment. Because with your health type policies, you could pay it weekly and have a 7-day grace period. You could pay it monthly and have a 10-day grace period. Or you could pay it all other modes, which could be quarterly, semi-annual, or annual, and have a 31-day grace period. Now, if your grace period goes by, your policy will lapse if you have not paid your premium. But that's why there is a reinstatement provision. So after a policy has lapsed, you can get it reinstated. A few things on your reinstatement of a health policy. First, reinstatement is automatic if the insurer accepts the premium and they don't require a reinstatement application. Now, if they do require a reinstatement application and the premium has been paid, then the insurer has 45 days to either approve or disapprove that application. Now, upon reinstatement, accidents will be covered immediately. However, there will be a 10-day probationary period before illnesses will be covered. The whole purpose behind the 10-day probationary period is to help prevent adverse selection or sick people trying to commit fraud. These next three, you need to memorize the numbers that go with each one. First, we have the notice of claim provision. If you have a claim, you must give notice to the insurer within 20 days. Now, notice to the agent does equal notice to the insurer. Once you have given notice of claim, then the claim forms provision says they must send out claim forms within 15 days. If you do not receive any claim forms, you can write the nature of your loss on any piece of paper. So it does not actually have to be on forms from the insurer. And then the proof of loss provision says you must provide them with proof of loss within 90 days, not to exceed a year, unless you are in a coma, and then they will give you longer. Your next provision is called the time of payment of claims. That word time is very important here. This is what I like to call the when provision. It is when our claim payments to be made. Well, claims are to be paid usually within 60 days, unless it is for a disability claim. And this is important. Disability claims have to be paid at least monthly. Next provision is the payment of claims. So see, it is very similar to your last one. The payment of claims provision is the who provision. It is to whom are claim payments to be made. Well, if I'm the insured, I would want it to come to me. If I am dead, I would want it to go to my beneficiary. If I didn't have a beneficiary, I'd want it to go to my estate, unless, and this statement is very important, otherwise assigned to a doctor or hospital. So you do need to know that claim payments can be assigned. Next, you have the physical exam and autopsy provision. Gives the insurer the right to have the insured examined as many times as necessary while a claim is pending. However, it will be at the insurer's own expense. Legal action provision. If you want to bring legal action against a health insurer, you must wait 60 days, but no later than 2 years in Arizona, or no later than 3 years in Idaho, or even in Texas. Next, the change of beneficiary provision. The owner can change beneficiaries at any time unless the beneficiary is set up as what's called irrevocable. If the beneficiary is set up as irrevocable, that means changes can only be made with the written permission of the beneficiary, which means the owner has given up some rights in their policy. Next, let's look at some optional provisions. First, the change of occupation provision. The insurer might include this in a disability policy so that if you go from a less dangerous occupation to a more dangerous occupation, then they could adjust your benefits down. Or if you go from a more dangerous occupation to a less dangerous occupation, then your premiums could go down. Your next provision is called the misstatement of age. It trumps the 2-year period of incontestability. So even after 2 years, as long as a policy is enforced, if they find out somebody lied about their age on their application, the insurance company is not going to deny their claim. What it allows them to do is adjust the benefits they pay out. So they're not going to deny it. They will adjust the benefit they pay out. These next two, there's words that you need to associate with each one. The other insurance in this insurer provision. So with this one, if you have multiple policies with the same insurance company and you file a claim, it provides a pro rata benefit reduction and a return of premium. However, if you have policies with different insurers, then the insurance with other insurers provision comes into play. And the way that would be handled is they pay on an expense incurred basis, and each company would pay a proportionate share of the claim. Next is the unpaid premium provision. So if you do have a claim and you haven't paid your premium yet, any past due premiums will be deducted from the claim. The cancellation provision says the insurance company must give you 30 days notice if they are going to cancel your policy. Illegal occupation provision. Just don't go out and start robbing liquor stores and get shot by the cops and expect them to pay. You need to get a real job. And then intoxicants and narcotics. Don't get drunk or high and have an accident, because that will be excluded. Other general provisions. The free look provision gives the insured the right to look over a policy and return it for a full refund if they are not satisfied for any reason. You need to know that the free look period begins whenever they get the policy in their grubby little hands. That begins their free look period. Some numbers you need to know about the free look. Number one, the free look period is 10 days from receipt of a policy to look it over and return it for a refund. So write down 10 days. Then there is a 30-day free look that is going to be applicable to Medicare supplement policies and long-term care policies. Those both have a 30-day free look. Your next provision is called the insuring clause. The insuring clause is the heart of the policy. It identifies the insured, the insurer, states what kind of loss or peril would be covered, and also will state the insurer's promising to pay benefits. It's located on the first page. It will always be there. Now, the consideration provision, the word consideration means something of value each party promises to the other. For the insured, their value would be the answers on the application, how they represent themselves, as well as their payment of premium. Consideration on part of the insurer promising to pay in the event of loss. So consideration, something of value each party promises to the other. And the most important part of our chapter, I believe, are your rights of renewability. These are also called continuation provisions. What these do is they will spell out the insurer's duty when it comes to renewing a policy. What you're going to find out is, does the insurance company have to renew it, and can they raise the rates? These also spell out that the insured always has the unilateral right to cancel at any time. So let's take a look at each one of these. Now, only one of these would be included in a policy, not more than one. Your first continuation provision is a non-cancelable policy. If it is non-cancelable, that means the insurer cannot cancel it, and also they cannot raise the rates. So a couple of things here. They cannot cancel, which means they have to renew it, usually up to a certain age like 65, because at age 65, that's when things change. That's when Medicare kicks in, things like that. And also, this is the only one of them where they cannot raise the rates. Next, we have a guaranteed renewable provision. Similar to non-cancelable in that the insurer has to guarantee to renew it up to age 65. However, with this one, they can raise the rates. But here's what you need to know for your test. They can raise the rates on what's called a class basis only. They have to do it on a whole class of insureds. They cannot raise them on an individual basis. It must be on a class basis only. And your Medicare supplements and your long-term care policies are both guaranteed renewable, but you kind of need those after age 65. So those are guaranteed renewable for life. Your next one is called conditionally renewable. So conditionally renewable means only for conditions that are written in the contract would be the only reason they could cancel you, and only at renewal. For instance, in a disability policy, it might state that the insured must be employed at the time of renewal. If they don't have a job when it comes up for renewal, that was written in the contract, that would be a reason for the insurer to cancel them. Next is optionally renewable. This one is at the option of the insurer, whether they are going to renew you or not. If they decide not to renew you, then any claims in progress must be honored. So if you got any claims going on, they got to continue to pay those. And also, they must return any unearned premiums. Unearned premiums are premiums that have not been used yet. And then the last one here is a cancelable or a term health policy. This will be your travel accident policy. It is only good for that period of time that you are traveling, and term health policies are not renewable. So that's going to do it for this chapter. We'll see you on the next video.